The stock of the day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
Big earnings out this morning. One of the biggest, Commonwealth Bank, our biggest bank, reported $9.8 billion cash profit for the full year, 2% lower than the previous year. But ahead of market expectations. The bank says the reduction in profit was driven by inflationary increases in operating expenses, which was partly offset by a lower loan impairment expense. The largest locally listed company will pay a final dividend of $2.50 a share, which is above forecast, taking its full-year dividend to $4.65 fully franked. And everybody has been saying sell Commonwealth Bank for about 9 months, but no one seems to be on the back of that result. It's still up 0.75% today in a strong market. I'll be catching up with Chief Executive Matt Comyn a little later on ausbiz in the close, live from 3 p.m. But Michael Gable, what do you think of the Commonwealth Bank's result? Is it justifying $133.30?
Yeah, it is.
Right?
It is. I mean, in the short term, we'll see what happens. But clearly, they're the best bank, so they're the most expensive bank because they're doing the best job. The numbers were better than what I think. Most of the numbers were better than what the analysts were expecting. But as you mentioned, David, the analysts have been saying it's a sell all year, so they haven't got it right at all. But obviously, it's been trading well all year. The market has been buying it up. So it'd be interesting to see over the next couple of days if those numbers, are what the market was expecting. So far, they're up a bit, not too strongly. Would they ease off? Maybe in the next few days, remains to be seen. But at the moment, it definitely looks like a hold.
It's the most expensive bank in the world, isn't it?
Yeah, but I mean,
as
long as they continue delivering, then I mean, you could pick the eyeballs out of the numbers and say, well, it's not justified. But look at the scoreboard. The proof is in the way it's traded and the returns that all the shareholders are getting. So, barring any, and I think from here it will only get better for the bank. Clearly, as we saw with the loan provisions, in terms of the numbers. Were down, but number of arrears are starting to creep up. So that is a bit of a negative. Right. But as we know,
not by much,
no. So as we know, when we get those interest rate cuts, that'll be a nice reprieve for those borrowers. So they held their margin, the 1.99%. So I think it can only really improve from here. I think at worst you get a share price that might sort of drift sideways for a while, but I don't see any big downside from here.
And with that sort of dividend.
Well, exactly. I mean, most
not a bad dividend.
All the retail punters buying CBA are in there for the divvy. So better than expected divvy. That's what they want.
Yep.
How
all
do
right.
you justify selling it?
Hang on. Michael Wayne?
Doesn't really matter what I think. The market seems to, like everything that CBA does at the moment. I've been sort of wrong on this for a while now. But
hang on, but everybody has.
Yeah.
Virtually every analyst in the market has been saying sell Commonwealth Bank, but somebody has been buying.
That's right. And it's, who knows? But basically, you've got people like Regal, L1, they've both come out saying they're now shorting CBA. And although today's result gets painted in a positive light, and it was good, they're winning market share off the other banks and those kind of things, but revenue fell, pre-provision operating profit fell. These aren't signs of a growth stock that should be trading at 23 times earnings.
Yeah.
Obviously, the conditions may improve next year. I mean, impairments were relatively good considering the environment. The capital position of the bank is very strong. Net interest margins were better than expected. So, if anything, it was more of a mixed update than overtly positive. But it's just a relative story. They are in a much better position than some of the other big four banks.
Yeah.
Their expenses did rise, but by not much. They spend a lot more in technology. So they're in a position where they can win a lot of market share. All the new migrants coming to the country, well, not all, but a big proportion of them seem to be going to Commonwealth banks. So for whatever reason, they're able to get their tentacles in early, whether it's young people or migrants, and then they're rusted on for life in many ways. So great franchise, great business, a dominant player in a duopoly without any competition really emerging into this country from overseas. So I struggle to see how it keeps pushing. I mean, how can you have a company that's not really growing earnings or revenue trading at 25, 30 times revenue multiple? You can't. So there's a good chance, I think, that over time things oscillate and go sideways. So that's just something to keep in mind. But I've been wrong before, could be wrong again on this.
Right. So, yeah,
I'm not buying it, and I would be tempted to take some money off the table. But
take some profit.
I understand a lot of people hold these things for a long, long time, and there's capital gains and all those things to consider. But it's very difficult to justify because the dividend yield's very low and the multiple that it trades on is very high. So I'm a seller or trim to sell.
Okay. All right. Take some profits
to
sell. Okay. All right. Commonwealth Bank, our stock of the day.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.